Everyone, thanks for joining today's debrief. My name is Sandy Shuren. I'm a principal in our rewards practice at Deloitte Tax, where we focus on everything from design to compliance to operations across a range of comp and benefit programs. We're really excited today to be with one of our alliance partners, Awardco, discussing recognition programs, some of the different issues that we see both domestically and globally. Really encouraged to see such strong participation today. Really excited to have kind of a good group. We have some domestic participants, some international participants across industries, across geographies. Just a couple of housekeeping items. For as much as we will talk, and it's hard to stop us at times, please chime in. There's chat functionality if you have questions. We know this has been a very hot topic for a very long time. There's some technical issues, there's some practical issues. So we really wanted to spend this time addressing questions that you have, not just the ones that we think are interesting. So please leverage the chat functionality, add any questions that you might have. We can't promise that we'll get to everything, but we'll certainly try to tackle what we can. In addition, I think there will be a survey opportunity after. Please let us know how we're doing. If we missed any topics, if we didn't get a chance to address some of the things that you're interested in, we'd be more than happy to do that separately. So with that said, let me give an opportunity for some of my co-presenters today to address themselves, speak a little bit about their role, and then we can get into the substance of today's presentation, if that makes sense.
Hi, I'm Annie Bearden. I'm a senior manager with Deloitte Tax, and I specialize in global employment taxation.
Hello, everyone. My name is Scott Walter. I'm a managing director with Deloitte Tax, focusing in employment taxes, U.S. domestic employment taxes, I should say.
Awesome. Erica Hunt here. I am an enterprise account executive here at Awardco.
Judd Tolman, head of sales at Awardco. I'm excited to be here and go over this topic today.
So we get a lot of questions just around structuring recognition programs. We've certainly seen, I think, for several years now, a lot of interest from employers for a range of reasons, whether that's more frequent recognition, diversity of recognition, speed to recognition. There's a lot of reasons that these programs have been growing. But before we get into the nature of the programs and some of the issues that we see, Judd, do you mind even just level setting for the group? When we talk about recognition programs, what are we talking about? And specifically at Awardco, what kind of recognition programs are you helping to administer?
Yeah, and even before I jump into that, I mean, the fun thing, Awardco, really the go-to-market was 2015. Now, if we look back over the last 8 years, it's kind of a wild ride, right? We think about it, we had a thriving economy, then we move into a worldwide pandemic, then we move into this situation where employees have a lot of power because the unemployment rate is so low. Now we're moving into this looming recession. It's been an interesting time to look at the recognition space. It's something that's been fun to see. When we look at it from our perspective, from the Awardco eyes, our goal is to recognize the good. It's pretty basic what we're trying to do. I love it because there's cool things that happen. One of my favorite stories, and then I'll get into answering your question, Sandy, but one of my favorite stories, one of our clients, a healthcare worker, a nurse actually had a patient who had no shoes. And, she took the shoes off her feet, gave them to this patient. She didn't know anybody was paying attention. She got recognized in the platform. It got escalated to senior leadership. It became a news story. And that's the world that we're trying to recognize. There's so many people that are doing things that are making a difference. And it's a fun thing to do. When we look at this, that's a pretty unique situation where that was a peer-to-peer recognition. Another nurse saw this person doing something cool, made that something known, and it was recognized. So, right. So that's probably your most common is peer-to-peer. Manager to peer. How do we allocate budgets? Taxation is obviously going to be monetary. So how do we deal with that? Service anniversaries. A lot going on there. A lot of things that I could get into with all of these. Onboarding. How do we engage employees right out of the gates? One of my most favorites that we focus a lot on is called earn. Recognition requires you to do something, me to see it, and me to take a step to recognize you. Well, what about all those things that people do where I can self-nominate, right? What if I need to create or complete an LMS training? What if I need to do an InfoSec training? What if I need to complete an engagement survey? All of these different things where people just need to do an action that employees know, or employers know, I apologize, is going to make a difference for their business. And so when we look at all those things, from our standpoint, we want to be a conduit to be able to, really recognize those things that are happening that create a better environment both for employers and employees, and ultimately engage them. So those are a few. I could keep going, but those are probably the most common.
Yeah, I love that. And I think that kind of recognition, we hear that a lot from employers, right? They're looking for ways to recognize more people for a broader range of activity and in a faster way. And I think that speaks to all that. Do you want to spare a little bit, Judd? I know, we spent a lot of time coming together at Deloitte and Awardco around our alliance and some of the reasons behind kind of driving that alliance and how we're working together.
Yeah, so it's funny. I mean, everybody online probably knows Deloitte, right? They're a behemoth. Fewer of you probably are aware of who Awardco is and what we do. A little bit smaller company. And it's funny because it's been 3 years now since the first time that we sat down here in Utah, had a conversation about what could an Awardco Deloitte alliance look like. Over the last 3 years, there's been a lot of questions, a lot of ideas and ideating on what it could become. But when we look at it, ultimately what this partnership or alliance is every single one of our clients and even non-clients, the people we meet with, they have questions around this. When we're talking about an employer giving employee money, the question comes up of how do we be compliant? Awardco, how are you going to help us as we're awarding to make sure that we're not going to get in trouble down the road? And, our standard response was, well, let us preface that we're not tax experts, but a thought would be this, right? And as we had these conversations, Sandy, more and more the conversation got up of, this is what we do, we're the experts. What if we married the two? Awardco is a phenomenal recognition tool. Deloitte is a tax expert. Let's marry the two together and bring this to market. And that's really where it started.
Yeah. It has been 3 years. I know Judd always tells me it feels like 5 minutes. So with that, I think that's right. We get those questions, obviously, kind of given the core nature of our business. So with that, we prepped just a very simple visual on the next slide here. One of the questions that we get, there's probably an inverse relationship between how complicated the slide is versus how complicated the issues are. But one of the questions we get, certainly from the HR community, is why should we be leaning into tax? Isn't that, quote, someone else's issue? Can I just decide how I'm going to treat this program? How complicated is it? What's the real impact of getting it wrong? All of these factors, we hear from different functions within an organization, but certainly the HR leaders that are driving these programs will ask those questions to us. And so what you see here are really just kind of three buckets of areas that we think drive the need to really address core compliance, both domestically and internationally. And the first is core compliance and risk exposure. And to be blunt, why should I look at tax? Well, because you have to, because there are rules out there and you have to follow them, and it comes with consequences when you don't. And that's true across corporate tax and partnership tax and individual tax. And this is just a specific area where we're saying, look, there are tax rules here. And the scale of the benefit, I think we hear from a lot of employers, drives them to behave a little bit differently. I think when people say, well, on any given individual basis, we may be recognizing them in a small quantity, right? A dollar denominated value that we think is relatively small in the grand scheme of things. And sometimes we will look at tax similarly. It's a small benefit, and so we won't pay as much attention to it. But what we found is that in the aggregate, when you're recognizing hundreds or thousands of people across 2, 5, 10, couple dozen jurisdictions, that risk exposure grows just simply based on scale. So you have to, and that risk, you have to look at it in the aggregate, not on any individual case. When we talk to HR leaders, there's also the employee experience component to getting compliance, right? I refer to it sometimes as the final mile. Judd, we talk a lot about the Awardco cycle and all the way from designing these programs to implementing these programs, getting communications and education right, getting managers to actually recognize their people or peers to recognize peers. There's a lot of work that goes into these programs before anybody even decides to recognize someone.
Sure.
Then we go through the process of recognizing someone, and unfortunately, sometimes it might fall down because we haven't reported it correctly. We haven't grossed it up correctly. We haven't withheld correctly. And that's the tangible part in our experience of these programs, when employees are actually receiving their benefit. And if it falls down in their wage statement and they have to go chasing payroll to say, hey, look, this was misreported or I wasn't grossed up correctly, it really drives a negative experience and pretty much the most tangible part of the process to an employee. So even if we don't, quote unquote, care from an employer perspective, we're willing to bear that risk from a business perspective. We can't make that choice for employees when we get this wrong, because it really just kills the actual tangible part of these programs. The final bucket, and we like to say in tax that we don't often view tax as a revenue generating function, even though it can be at times. But we've certainly seen cases across our clients for years now, across comp and benefits, but including recognition programs, where we challenge these program sponsors to lean in and look at the tax profiles of these programs, because you may be overpaying taxes. We see all the time employers, well, we see it on both ends of the spectrum. Some employers who will say, I'm just going to treat this as non-taxable for a laundry list of reasons. Or I'm going to treat this similar to cash and just tax it at every tax under the sun. And for the employers who are on that end of the spectrum, who are just assigning a default earnings code and saying, look, I'm going to tax this for every tax possible, that may be the right treatment. It may not. Lean into that and look at that, because you may be overpaying both on the employee side and the employer side. And those are employer contributions that you may be paying that you may not have to. And common examples that I know Annie will speak to in a little bit, but service anniversary exemptions, specific recognition program exemptions, career milestone exemptions. There are a number of exemptions out there that could be applicable, which will actually generate to bottom line local currency savings. And in the middle there, we get, well, how do we do this? And it really starts with having the right experts on it. I'm sitting next to two of our deepest technicians in the space, people who've been advising on this for years, both domestically and globally. I turn to them all the time to say, look, we really need not just the surface level understanding that I can find after generating an internet search, but give me 2-3 levels down. What are the rules? What are the missing? What's the practical here? I think we missed out a lot of times too. When audits come up, what are they really looking at? Don't just give me the rule, but what's an auditor going to ask me in an audit? And that's the kind of insight that I think drives employers to really operate these programs, not just compliantly, but when they're making business decisions, I'll bear a risk or I will look at something. They're doing so intelligently. They know the practical in addition to just the technical.
Yeah, and one thing I'd actually love to add, I know, I'm excited to get into some of the technicals on this, but Sandy, as you're talking about those details, one of the conversations that we had early on, we were talking about, we sat down with a client and had a conversation around how do we address service awards specifically. It was a very simple conversation, and just making sure that those boxes were checked to make sure it was a positive experience. But then all of a sudden there was a nuance that came in that said, oh, by the way, we have these employees in Canada.
Yep.
And all of a sudden the conversation changed completely. And even though it was a small percentage of employees, sometimes it's just they don't take the time to really understand what does that mean. And the CRA versus the IRS has completely different tax code that, fortunately we were able to get an expert on the call just real quick to make sure that, hey, are we right in Canada? Because the US is very different. What does unlimited mean for service awards, or limited, I apologize, versus that for the CRA? And so I love it. And, the other thing that I just want to mention is, why have this conversation? Compliance is important, but also, is there a better topic than tax? What a fun thing to talk about.
We agree.
Early
To answer
in the
your question
morning,
directly, no.
yeah, there's nothing better, right? Like let's start the day off with a bang and get into taxation. So anyway, I think that sets the stage though, and I'm excited about where to go.
Absolutely. Yeah. And I think, Annie, I know you had some insight on the global stage. I mean, you raised the international point, which I think is a great one, because we get that question from clients too. How different could it possibly be? And it can be significantly different.
Yeah, well, we work with a lot of large global clients, and the longer they've been around, the more that they've heard, the more word of mouth kind of trickles down, and the more that they've seen. But generally speaking, those organizations, they also understand the importance of taxation. It's valuable to them. They see why it's important to focus on it. The global piece does bring a lot of complexity into it, and I'm excited to get into it. So Annie, why is the global piece so important? Why should organizations focus on it more?
So if we go to the next, I think 2 slides forward, the global piece can be, the next slide, sorry, can be super complex. There's a lot of different things that you need to consider as an employer when you're operating in multiple countries, especially when you're operating a recognition program. We have service anniversaries, peer-to-peer recognition. So this slide kind of goes through all of the different possible considerations. The first one being, taxable value. How do we value this recognition? Is it based on points? What's the value of the points? What about shipping costs, admin fees, things of that nature? You have to consider timing. Is it when the points are awarded? Is it when a recognition is received? And then what taxes apply? I mean, we have income tax, social taxes. Every country has their own tax rules, regulations, tax schemes. So it can be super complex operating in one country or 20 countries. There's different reporting requirements, and it's just it can be pretty overwhelming, especially when you're operating in more than one country. And as an example, if we can go to the next slide, we've talked a little bit about service anniversary awards. So, for example, if you have an employer that's giving a non-cash service anniversary award in one country, there's a tax exemption. However, in order to get that tax exemption, the award must be considered a, quote, achievement award and qualify as a length of service award. In this case, it has to be tangible personal property or something that's selected from a limited catalog. If those conditions are met and the value is no more than $1,600 US, it can be excluded from an employee's income. However, that's only the case in one country. If we look at another country, we have a second example on here. Same award, service anniversary award, non-cash. It can be exempt. However, all of these conditions must be met. The employee has to work for the company for at least 20 years. And in the previous example, it's only 5. So right off the bat, you have a huge difference. The value of the award does not exceed 50 pounds per year of service. So similarly, the valuation is completely different. And then you also have to look at if the employee's received a long service award in the past 10 years. So if all of those conditions are met, then it can be tax exempt. So this is just 2 countries. Every country has their own rules, regulations, and it's not to scare employers, but it's just, something to keep in mind and consider that the treatment's different and you might need to maybe design the program differently for different countries, or it just needs to be treated differently in different countries.
Sure.
The crazy thing though, Annie, is we're talking about one program and 2 countries.
Yeah. Exactly.
Right? Like that's kind of a basic, and service anniversaries is kind of, that's kind of the doorway into recognition, right? It's not really where the rubber meets the road to drive engagement, to drive change, culture, all those things that employers are looking to do. And even in that, we're talking about this level of complexity. And the other thing that's crazy is we look at this and we say, like, the taxation is so important, but at the same time, in country 2, we look at this and say 20 years of service. Well, the average in the US is 2.3 years. So how do we think about these recognition programs to be compliant, but also to drive engagement? It's so, the 2 have to blend together.
Mm-hmm.
And it's, I think, not as simple as most people, even myself who's been in this space for a while, usually think.
It's extremely complex. I mean, we look at some countries that have exemptions for things like holidays or birthdays, and employees might expect those awards. While in the US, we don't have exemptions for things like that. So it's definitely something to be aware of and to keep in mind. And luckily, Deloitte has the experts worldwide to support on this.
Yeah, I think 2 things that also jump out to me when we think about the how the rules are incongruent when you look kind of globally is, one, even if you just look at the slide, I think a lot of employers that we work with, well, certainly some will pause and say, look, I don't mind looking at these rules, but do we have the tools to really track these different requirements, right? And country 2 here has a 3-prong test for an exemption. And where will I get the years of service? How will I be, where's the system that's going to record keep whether they've been recognized in the last 10 years? Are the 2 even on the same platform? Are they on different platforms? Do I have to link that somehow? Can Awardco help me with that? Tracking the value, we put local currency number up here, but how is that number? If we go back 1 slide, I'm sorry. There it is. Look at just the number of scoping items that would go into even addressing that 3-prong test, right? So we get something, we figure out it's taxable. Well, what's taxable? What's the fair market value of that? How do we define actual cost? What FX rates do I have to use? Can I just be dollar denominated and everything? Or if I go local currency, can I use the business's FX rates? Are there local in-country rules around what FX rate am I supposed to use? When we talk about something's taxable, there's lots of layers of taxation. You've got what we in the US might refer to as federal taxation, and then regional taxation across cantons and provinces and states and regions, right? So is it taxable federal, regional? Are there local taxes that are involved? And when we talk about employment taxes, are there pension contributions that I need to make? So I think even the tax profile, it's one thing, globally, right? That means something in something different potentially in different countries when something's taxable. I think we've seen that in different countries.
Now, regardless of the complexities, what's the importance of getting it right? Right? There's a lot of levels here, but why is it important to to pay attention to these details, to make sure that if you are a large global organization, let's say whether you're in 5 countries or 30 countries, what's the value of making sure that it is done correctly, would you say?
I mean, I think there's kind of two different approaches. One is, I mean, it's material. You know, you could have some serious penalties assessed. Depends on the country, of course. Sure. But an employer could be liable for all of the taxes plus penalties and interest. And, you know, that's never fun. But then to Sandy's point earlier, the employee experience part. If you're not withholding tax, maybe the employee has it reported on their tax return at the end of the year, and then they owe taxes. And that's not a great employee experience, especially when you're trying to award or recognize an employee for doing good. You don't want them to have to pay something 10 months later down the road that they weren't aware of.
Yeah, I think the other thing we run into a lot of times is this core question of, it's a great question, right? What's the real impact of not getting this right? And I think you get a different answer depending on which function you speak to at an organization, right? I think there are certain people who are much more sensitive to compliance. There's other people who are really who are more focused on the design of these programs, the delivery, the communications, the education, but less so around the operations piece of it.
Yeah.
So I think depending on which function you talk to, people will tell you it's important, but maybe for different reasons.
Yeah.
And they'll be more or less sensitive to it. But I think they will all agree that it needs to be addressed. The other, I think, challenge in addressing this, even if I just look at what we would call scoping items, some of the core issues to address is, okay, so I'm a leader at an organization that wants to roll out a program. We're engaged with Awardco. We're going to roll this program out. Well, whose job is it to look at this? Right. I think we run into that issues. And a lot of times, and we see a growing number of organizations, and I know Andy, Scott, we were talking about this a little bit. We see a growing number of organizations who have a rewards and recognition leader. Yep. Maybe something like this traditionally fell in the scope of someone who was assigned to employment tax or payroll. But now we're seeing an increased number of rewards and recognition leaders. And I think for those who are joining today, and maybe even those who aren't and might listen to this later, this should be on their radar. Would you agree?
Oh, yeah, absolutely. And we're also seeing a lot more global employment tax rules at companies. So, that's a person, that's an individual who's starting to address, those types of questions. So, we're certainly seeing, a lot of folks start taking ownership of this marketing space.
Yeah.
One other thing that I want to just mention, because, by nature of this topic, obviously the conversation kind of leans into, well, what if we don't do it right? You know what I mean? And those are going to be the kind of the common conversation, but or questions that get asked. But I think one of the things that's so important to understand, and just to make mention of, especially when we talk about rewards or recognition, Annie, you talked about this with, the main intent is to drive engagement or positive business outcomes, appreciate employees. And I think one of the biggest things is our focus in this alliance and making, this data available is, how do we do it the best possible way so that we can have these employees engaged in a more positive way, right? How do we make sure we do it right up front? You're talking about this, potentially in a boardroom. We're scoping out, what are we going to build? How are we going to build it? Well, if we do it right, we can then trust that the system is in place and now let it go take its course, right? Let it go become a positive impact across those employees, those different groups. And ultimately for, the clients that we work with, that's the drive. We've got a large financial institution that we work with, and they were able to increase their engagement score from just a number of 2 years by 13 points. And that's the reason why this matters. And so when we talk about the tax side, I just want to say that because it's easy to focus a little bit on but what if? Mm-hmm. What are the ramifications? What are the penalties? Let's not get nervous. Maybe we don't do this.
Yeah.
That's not it at all. How do we focus on the positives to make sure, we're doing it, but we're doing it right? Right? We're being compliant. Sandy, you start going down the path of everything you were saying, and I start to kind of seize a little bit and get out of it because it's just, I don't know anything about this, right? There's a lot of people that we work with, specifically in the HR space, that they're not familiar with it. They don't know where to go, as you were alluding to. And so I think that those are so important to compartmentalize what the objectives are, is to be compliant and do it right, but not lose sight of what the primary objectives are in doing those type of programs.
Yeah, I think that's right. I mean, I think we want to focus on the core talent objective of sponsoring these programs, right? And eliminate a barrier to rolling out a program like this, right? I think that's exactly right. When we show kind of some of these points, and there's more, we're range bound by the size of the slide, but otherwise we probably would put more points on here.
Sure.
There's just a lot to consider when you shape these programs. And the other thing I'll say too, from a global perspective, is there's been a real drive, I think, across what I'll generally refer to as the comp and benefit space for years around employee experience at the headline level. And in the global context, we challenge a lot of our clients to think about what it means to be truly global. And when we talk about tax, sure, I think a lot of organizations think about it from the employer perspective, like I need to make sure I get my compliance right, but it's broader than that. When you're educating your plan participants about everybody wants to be recognized, and that's exciting. There's a lot of really good energy around that, but we need to deal with this piece of it. And should we be giving, local guidance to our plan participants? This is what it means to receive recognition. You got some points in your account. Am I taxable in that? Am I not? I'd feel more comfortable about participating in this program, and I'd feel have a much more positive view of this program. I felt educated on the tax consequences. At Deloitte, we run a number of recognition programs ourselves where we're recognizing our people. And we try to give that guidance to them to say, look, this is what it means to receive this. Because that's one of the first questions. Okay, I got this benefit. Net of tax, what's it really? Right? I think a lot of participants think that way. And so if you've decided to gross them up, great, explain that to them. And if you haven't, then explain that to them. But let them be more confident that they understand the ramifications of these programs. I think that'll drive more excitement and more comfort in participating in the programs.
Sure. I wanted to go over some Mythbusters with you guys. These are topics and questions that we hear all the time. And like Jed said, we usually give the caveat of we're not tax experts, but here's some things to consider and do with it what you will.
Judd's not saying he's not a tax expert anymore. I've seen him in some
After
meetings.
today,
I know, after today, he might. But these are some things that we want to go over because they are, like I said, brought up almost on every call. So one of the topics is if I use swag, company branded merchandise, it's always tax-free. We hear this all the time. I feel like it randomly came out of left field one day and now all of a sudden everyone's saying it.
Totally. Someone started the rumor, at least like from a US perspective, that if you slapped your company logo on something, it meant it was tax-free, which is not the case.
Okay.
I think a lot of times we see companies that give people a t-shirt or pens or caps or mugs. And, sure, that probably qualifies as de minimis. It's not necessarily something that has value on the open market. But when we're looking at things like iPads or Bluetooth speakers, just because it has a company logo on it does not make it de minimis. At least that's the IRS's thought. So we hear it all the time too. Company swag, if it's branded, it's tax-free, right? And from a US tax perspective, it's false.
So it still follows like the program.
Yeah, it still follows.
compliance.
It has to be de minimis. So if there's any kind of value to the item on the open market, it would be taxable.
Okay. You heard it here, folks. It's not. Okay, now another one, and this is more speaking specifically to service anniversaries, career milestones. But the conception or the understanding is I cannot use points for service anniversaries because it's still considered cash-like.
So the IRS does say that again, this is US tax perspective.
Sure.
That service anniversary awards have to be tangible personal property. However, they also have a clause in there that says if you can select from a catalog of items of tangible personal property, that qualifies. So in Awardco's case, if you do have a limited catalog of items that someone can select for, if they get a service anniversary gift, then it would still qualify for that tax exemption.
Awesome. Another common one is de minimis, and you mentioned it already, de minimis. And the understanding is de minimis is anything under $100, and then it is tax-free.
Yeah, so that's not technically correct. Right?
Sure.
At the end of the day, when you look at the Internal Revenue Code and how they define de minimis, it's dated, right? They use things like unlimited use of a facsimile machine, right? The occasional office donuts, things like that. And over the years, what we've seen is employers start pushing that, right? Well, instead of donuts, what if I do this and this and this? And what we saw is that dollar amount start creeping up of what an employer might consider de minimis. The service came out a number of years ago, and they came out with a ruling which essentially said, something that's $100 is not de minimis, right? So they didn't go and say anything under 100 would be de minimis, but they came out with this test of, well, $100 certainly isn't de minimis. And what that means is that a lot of employers have then felt empowered to say, well, anything under 100 de minimis, anything over 100 is not de minimis. That's usually what we see out there in the market. And it's not to say that $100 is some bright line test,
Sure.
but most employers rely on that guidance that, 100 and over, not the minimus, under 100 is, and that's probably a practical decision, less so rooted in actual internal revenue growth.
Okay.
I think it's hard to go 2 days in a row without someone arguing de minimis.
It's fair, fair.
I'm sure.
Didn't the IRS come back after and say we should have never said that?
And in essence,
Because they put $1 on it and said, "Oh, we just drew a line in the sand."
absolutely. I think they probably would have liked to rephrase.
Sure.
a little bit.
Redo.
One quick question. On that.
Yeah.
How do you advise your clients when they talk de minimis? What does it mean to you?
It means something different to everyone.
Look,
right?
I'll give our preface. This
Yep.
is not advice. This is simply a statement.
Sure, fair. Thank you.
Yeah,
Thank
yeah,
you
yeah.
for not getting me in trouble.
Exactly right.
I think it depends on the client and it depends on the materiality threshold and the risk exposure, right? Some clients may feel more comfortable pushing that $100 limit. Others may say, you know what, we're going to stick with 50, we're going to stick with 75. It really depends. It depends on the client. It depends on the employer, what their risk threshold is. We see different thresholds across the industries and across, various employers. So it all comes down to what you're comfortable with, and I'll get into this in a little bit, but I hate to keep saying employee experience, right? But the problem of doing something and excluding it from income and then having to be challenged by the IRS can create some employee experience issues, which I'll talk about.
Sure. Okay, and another myth or theory is that organizations should tax on redemption of points because the employee doesn't necessarily get the gift until it is redeemed.
Yeah, so that's something we hear a lot about, and I'll talk about some of the audit activity a little bit later, and we'll get into some of the rules here. But the reality is it's going to be dependent on the specific plan. But most prize point plans, right, are going to be established in such that once you award those points, you create taxable income. So it's the award, not the redemption. And we see a little bit of a different answer out there globally. But from a US perspective, it's really going to be driven on the actual award of the prize point. What the service has said in previous rulings is they look at that as a cash equivalent, right? Same thing as giving an individual a gift card in a lot of situations. You give that individual a gift card, they can use that to purchase whatever they want. That gift card is purchasing power just like cash. It's the same with award of points. Now, I'll caveat that by saying it usually depends on the plan, right? We like to look at the overall plan to make sure that that's correct, but it's typically from a US perspective, the award of the point rather than the redemption of the point that creates taxable income.
Okay, I like it. And the last one, which I'm excited to get into and for you to present more on, because this is also a very common misconception. I am a US only organization.
Yep.
I am all domestic. Taxes are easy. We don't need to consult on anything. We understand it.
Oh, Erica. Yeah, no.
Can we hire the person that thinks that?
Yeah, right?
It's a question we get. It's,
Sure.
It's a misunderstanding. But I think anyone who's ever been in an IRS audit situation or even been audited at a state level knows that U.S. taxes are complex. Right? They're complex because we have so many unique compensation vehicles. There are such a number of rules out there. Right? We have administrative rulings, we have Internal Revenue Code, we have Treasury regulations, we have court cases, and all of this kind of create this patchwork of rules that we have to comply with. And the U.S. does a pretty good job of staying on top of the various forms of compensation vehicles we're giving folks. Now, we'll get into this in a little bit in the next couple slides. They're a little bit behind on prize points, candidly. But there is some legislation, or I shouldn't say legislation, there are some rulings out there which are applicable. So if we can move on to the next slide, actually, I think 2 slides. Perfect. I'm going to talk a little bit about what happens if we get this wrong, right? From a US perspective. What happens from an employment tax perspective if we get this wrong? And this slide really deals with tax exposure, but I'd be remiss if I didn't talk about, once again, employee experience.
Sure.
Right? Because at the end of the day, what we see out there is there's 2 potential exposures. We got tax exposure for the company, and then we have an employee experience issue. And for a lot of my clients, really, they're more governed or more guided by the employee experience. And the reason being that if you get this wrong, if you don't include this in taxable compensation correctly, you create exposure for the individual. And what you create is an obligation to have to do amended tax returns for that individual. So for example, if I miss compensation and I don't report it for one of my employees in a prior tax year, I have to go back and issue that employee a W-2C. That requires the employee from a US perspective to go back and amend an individual tax return. So it's not just a matter of, hey, here's the exposure for me as an employer of what I'll owe if I don't do this correctly. which we're going to get into in this slide. But it's more of, imagine making your employee population have to go back and file amended returns for prior periods, right? That's something that most of my clients want to avoid at all costs.
Yeah.
And that's why it's important to get this right.
Get a lot of thanks question mark from the employee.
Absolutely. You know, trying to, have individuals remember what their, login password to their tax preparation software in July is. Right. It's challenging. You get a lot of employees saying, why do I have to do this? And, the challenge for a lot of employers is, since they technically created this issue, they want to help employees fix that. But that's not the best answer. You want to have those individuals work with their individual tax return preparers or advisors to figure this out. So it feels a little bit for a lot of my clients like you're abandoning the employee, right? Here's a W-2C, go figure this out. And that's a driver of why a lot of my clients want to get this right. But a secondary factor is certainly the exposure. So when we have an exposure issue, when we have an employer who fails to include something in compensation, these are the typical penalties that we see assessed. First of all, as an employer, you're going to be responsible for all of the taxes you should have withheld. So as an employer, you're withholding income taxes, you're withholding Social Security and Medicare taxes from your employees. You're the custodian of those funds. You give those to the service, and that that pays that individual's obligation in. But if you fail to include these amounts as compensation, those withholding amounts now become your exposure. So you're internalizing the cost of the employee and taking those on yourself. So you're going to be responsible for everything that you should have withheld from those employees. That's a cost. That's a direct cost for our clients. You've got an accuracy related penalty. That's usually 20% of what you should have withheld from the employee. You've got failure to deposit penalties. So when you don't pay in your required portion of your employer's Social Security or the employee Social Security and Medicare, you're creating a 10% deposit penalty that you're going to have to be assessed and paid in. And then finally, you've given that individual a W-2 that's not properly reporting all of their income. That means that you're responsible for an information statement penalty. You've given that individual, in essence, an incorrect W-2. So these are the most common penalties that we see applied in the space. And when you start looking at these can get material depending on the population.
And these are just federal too.
That's a fair point. These are just U.S. federal employment tax penalties. State penalties would apply, and you're also potentially looking at interest as well. The other thing to keep in mind is when we talk about these penalties, it's important to remember we've got a 3-year statute of limitations. So you're not looking at a single year. The service, to the extent they ever were to audit and assess this as an issue, can go back 3 years. So you're looking at these penalties for each of your open years, which are typically 3 in any audit cycle.
And I think one thing, Scott, just a quick plug for, I think, the variety of populations that Awardco supports. We're talking about kind of plain vanilla employees in this context, right? But we have a range of plans. We've got gig workers, non-employees, consultants, potentially with different treatment than what we're talking about here. Some have a withholding obligation, some don't. Some have different forms that are used to report compensation. So here we're talking about kind of the plain vanilla employee. But if you've got a more diverse workforce in terms of payee or plan participant relationship, the rules could absolutely be different.
Yeah,
absolutely. Again, employee. These are the employee related issues, right? When we're talking about gig workers or contractors, you may not have a lot of these exposure items because there's not the employment tax withholding that you'd have to do, but you create a lot more issues for that individual. They're going to have to pay in these taxes when they amend their tax returns. So,
and to Scott's point, this is just the U.S. Globally, all countries have penalties. They range. And I will say a lot of countries, the statute of limitations is a lot longer. It can be 5 years, 6 years. I think I've even seen up to 10.
Yeah. Well, and I love that this is being discussed. Hopefully this is highlighting the importance that regardless if you're domestic or global, this is something to value, to put as a priority, especially when you're mapping out your recognition programs. Do it right so that we don't have to go back and reconstruct everything. And what this alliance, I think, is aiming to do is provide and bring all of it, full circle. We have the consulting and the tax piece, right? We have the Deloitte tax tool inside the platform to help provide clarity, provide, some answers and direction of where to go. Awardco on our end, because there's so much variety to what countries may have certain benefits versus others, how programs beginning to end of a workflow need to happen. We've got the resources and the technology built to be able to facilitate that. Different employees, whether they're all U.S., but in different, departments or industries and different types of employees, they can have different types of workflows and programs, different redemption access. Same thing globally. for different programs. So we get really into the nitty gritty and into the weeds on, okay, this all sounds like a lot. How do I now make sure that I'm doing it right? And it seems overwhelming. Well, with this alliance, we want to bring that breath of fresh air to our clients, right? We want to make sure that, okay, tax is important. Here's the compliance. Here's what to do. And here's the things to consider.
It allows clients to set it up right from the beginning. You can design your program to be more tax efficient, tax compliant. And then when you implement it, you don't have to necessarily consider all of these different things. It's still running in the background, but you know that you've set it up that it can operate compliantly.
Right. Well, and you don't have the what ifs in the back of your head, right? I feel like this is going to introduce a lot more confidence in, okay, we're pressing live now, but we know beginning to end, even before the program's even live from a compliance standpoint, we're good to go. You hit live and you've got confidence that, okay, this is set up properly. Now Awardco focuses on the engagement piece. Are your employees responding to this, and are we seeing, KPIs increase on the overall like interaction?
Yeah. Well, you're absolutely right? Front end.
Right.
The more we can do on the front end, the beauty of most payroll systems is once you get that set up correctly on the front end, it just flows.
Yeah.
So it's spending that time making sure we get this right, making sure we get the tax set up right.
Yep.
And once that tax setup is done, you can focus on the bigger issues.
Sure.
Yeah.
Sure.
We can move on to the next slide. I'll talk about now a little bit of, we've got a quick example just to put some numbers to the percentages that we showed. And this is an example, right, where we're showing a total of $500,000 of awards that are provided to employees. When we look at the total exposure, just high level, just focusing on federal income tax, you've got an exposure of about $132,000. So $500,000 of awards can create a penalty for an employer of $132,000. And that's just, again, focusing on federal income tax. You still have things like Social Security, Medicare, state issues, interest. So the dollar amounts can become material. I know I said that a lot of my clients are driven by employee experience, but depending on the size of your award program, not setting this up correctly can create some material exposures for a company. Let's move on to the last slide, or my next slide, I'm sorry. Want to spend a couple minutes talking about U.S. activity, right? What we're seeing out there in the market, what we're seeing in terms of audit activity, breaking this up between federal and state. So taking a step back, when we talk about federal or IRS audit activity, it's important to kind of set the stage of where we are and what we're seeing out there in terms of general employment tax audit activity. There was a national research study that was done a number of years ago where the IRS said, how can we audit employment taxes better? How can we close this tax gap? And one of the things they focused in on was compliance, making sure that companies are reporting things compliantly, even when at the end of the day, there's no material tax impact. And we're seeing that out there with IRS agents. They want to make sure that employers are compliant. So when they come in and do audits, they're going to look at everything. They're going to look at, non-resident aliens. They're going to look at independent contractors. They're going to look at equity deposits, and they're going to look at fringe benefits. They're going to look at things like award or prize points or any of those, what I'll call general reward programs that are being implemented. And one of the questions they'll ask in a standard information document request is, do you have any type of award programs? What are you providing your employees? And when they ask that question, you're going to have to answer, right? You're going to have to tell them, well, these are the things I'm doing. This is the type of program I've implemented. These are the types of benefits I'm allowing my employees to pick out from my catalog. And what the IRS is going to expect to see is a tax program set up behind that to make sure that those items are being properly calculated and run through payroll. So we're seeing audit activity out there focusing on compliance, making sure that employers are, crossing every T and dotting every I, especially when it comes to compensation being provided. Are they looking at award programs specifically? Yes, absolutely they are. We've seen that in audit-related activity. So when we talk about, are they auditing? The answer is yes. We're seeing more and more employment tax audits focusing on this type of compensation events. But what does that mean, right? When they look at one of these programs, what are they saying? The interesting thing is that a lot of the guidance out there is really dated. It'd be nice if the IRS were to take a look at a prize point or an award program and say, here's exactly how you do it. But that's not really the case. What we have out there is kind of this patchwork of rulings that we use to determine when we have a taxable point, meaning, when are these award points going to be taxable? And there are really two rulings out there that we talk a lot about in the space. Revenue ruling 68365, which has to do with prize points, stamps. or individuals are provided stamps, was what they used to be called in the 60s, and individuals could use those stamps to purchase items.
So stamps is synonymous with price point.
Correct. It's the old version of the price point.
Interesting.
Okay.
In 1970, we kind of advanced a little bit. We started referring to them as price points and rulings. So the revenue ruling from the 70s talks a little bit more about price points. But what both of those rulings state is that price points are taxable to individuals. Kind of what we alluded to earlier, right? That typically when you have an individual who's awarded points, those points have a cash value, and those points should be included in taxable compensation. Those are the two pieces of administrative rulings that we see the IRS use in audit situations when they're looking specifically at price points. So they're going to be using these two pieces of what I'll call administrative guidance to determine whether or not these programs are being compliant and whether or not they're including these amounts in taxable compensation timely. And, I think we talked about this a little bit earlier, right? But it's not just a matter of, is this taxable or not? It's also timing. Because when you're talking about employment tax purposes, each event creates a deadline to make a deposit of the corresponding employment taxes. So not only does the IRS in an audit situation want to make sure that you're properly including these as taxable compensation, they're making sure that you're properly including these at the point in time that the points are awarded. Because if you're late, you create these penalties. And the IRS deposit rules are pretty onerous, right? They're going to say things like, if you have a prize point award on a Monday, you may have to make that corresponding deposit by Friday. So to the point you made earlier, it's important to set this up correctly in the system from the get-go so that payroll can properly report these and get these done timely. But those are the two pieces of rulings or guidance out there that we see the IRS use a lot. We've also seen them update their information document requests about fringes to specifically start including things like awards, looking at prize points and things like that. So, I'd say they're getting more in tuned to what's happening out there in the space. It normally takes a couple of audit cycles for the IRS to start seeing different types of compensation vehicles before they start making it onto IDRs or information document requests. But the expectation is we're going to see more and more of this. And, we all have some examples, right, of clients that we've seen where they've been audited on things like this. And I can tell you, having survived a couple of those audits, what the service looks at, they're going to want to see the program, right? They're going to want to see what you've done, what you have in place. They're going to want to see timing. How are you properly tracking when these points are awarded to individuals? They're going to want to see, well, how are we figuring out dollar values, right? They're going to want to see all of that. And they're going to want to make sure that all this is being properly reported to payroll. So it's important when we're designing or rolling out these programs from an HR perspective that we're making sure that payroll is also involved so that they can, I don't want to say, weaponize, but make sure that they get all of this logic into the payroll system so they can get things timely reported.
Yeah, you don't want to find out on the back end you're short on information.
Absolutely. Yeah. Absolutely. And, talking about the states a little bit, usually the service kind of leads the way, right? The Internal Revenue Service is out there. They kind of create these audit platforms or audit programs, and then the states follow suit. So we're seeing a lot of states start focusing a lot more on this. But an interesting point is that there is information sharing between federal and state. So to the extent you're ever audited for federal purposes on something like this, and you're found to be deficient and assessed, the federal government can share that information with the states. So the states can actually find out from the Internal Revenue Service whether there's been an addition to tax. And that can often trigger their own review. Because for a lot of purposes in a lot of different states, states defer to the federal. So if you're including additional compensation for federal purposes, that typically creates an additional assessment for state purposes. So, when we talk about the world of employment tax exposure, again, we've been focusing a lot on federal, but keeping in mind, if something pops up for federal and you're assessed, that's going to have a flow-down effect to the state.
So a couple questions came in that I thought maybe we could speak to. I think there's one general point and one kind of a good meaty technical issue that we can let Scott sink his teeth into.
Sure.
But there was a question around, it was a little bit high level. So if I don't address it directly, happy to follow up with whoever it was kind of after. But this question around how do we address core compliance within our tools, and what are the different ways that we can get our systems set up? I think that's the crux of the question, to be more compliant and more accurate in our treatment. And I would say, I think there's a lot of components to that, and that's exactly what we work with a lot of our clients on. Okay, great. So step one, we handed off our program structure. We might work with the Awardco directly to get the facts around kind of this individual employer's program. Step 2, we might do the diligence on, okay, well, this is what we think you need to do to be compliant and to operate payroll correctly. But then step 3 is the how, right? So we've got a bunch of these rules and we think we're right on them, but now we need to translate words into numbers, right? And take these numbers and actually execute and report. And I think there's a couple ways. I'll speak pretty generally here, because I think there's going to be a lot of nuances based on what HRIS you're operating off of, what your payroll system is, what your manpower is in-house, what other tools you've invested in around automation. But high level, I would say, one, we always encourage employers to really lean in on their different tax profiles, right? That's step 1. So you've got a bunch of these words. Then we need to get into kind of our earnings codes, right? And say, like, are they structured correctly? I'll reserve my opinion, but I will say we see a lot of times payroll implementations happen and we're not stress testing those earnings and deductions codes. So once you get this guidance, both domestically and globally, let's look at the profiles that we're attaching to these people and to these payments and make sure that they're structured correctly at all the different levels of taxation that we've talked about. I think a lot of times people focus on federal treatment, but you've got federal, you've got regional, you've got local taxes in some places, you've got employer contributions, you've got employee contributions, you've got state pension funds, you've got a number of different contributions that might need to come out. So stress test that. And then broadly speaking, the other piece is a lot of times we'll ask clients that we'll get into a discussion around payroll uploads, right? And say, look, my vendor, for a specific program may not be feeding me a payroll upload. And globally, you might be operating on a bunch of different payroll platforms or have different payroll vendors, right? They've all have different requirements. So it's one thing to say I've got a US build, right? And maybe I can get kind of a US upload. And we see that more commonly, but certainly once you go global, we've run into that challenge a lot and said, like, look, my payrolls have different requirements, different needs. I might treat them differently in different countries. I need to take into account a lot of what Annie was talking around different exemptions and treatments. And so we may need to work to develop a specific upload to address your given payroll platform in a different country or a different region. So that's really high level, but how do we operate? How do we move to the operate piece of the advice? Is really fact sensitive around your payroll platforms and what you want to do, but hopefully that helps give some context.
And I think maybe to even back it up, I think it'd be helpful. I think there was maybe a question around like what, how are we partnering together? What does that look like when Awardco and Deloitte Tax partners together? If you kind of want to speak.
Well, that's what I was going to touch on, Kenny, because that's what I interpreted this to be as well. Because the question is, there's a gap between maybe what should happen and actually the execution side of it. Mm-hmm. And that was where this alliance that's where it was birthed, is how do we help people do that?
Yeah.
And so, it doesn't necessarily execute on everything, but what we built is within the Awardco system, there's a content library that tells you exactly how to handle taxation based off of certain criteria of program build. Yeah. And so if I go in and look at that and say, okay, I'm going to build out, spot recognition, I'm using merchandise and gift cards, how should I tax? Are there opportunities to be, tax-free or deductible to the employee? That was where this relationship was really, built off of.
Well, I think a lot of employers, went into that discussion with some trepidation, right? And say like, this is going to be a big build. It's going to be expensive. It's going to take time. I don't, to get all this content. But I think what we've tried to do together is to eliminate that barrier, right? And say like, look, you can get the content that you need at a pretty low barrier to entry, right? And then take that challenge off the table and say, look, I've got the content here. Now shift to the operate piece. Scott, there was a question. They're coming in fast and furious.
Yeah, we got a couple good ones. I like it.
Wait, hold on. Scott can give me all the answers. Let's see. There was a question, an interesting one around
Lunch.
COVID.
It was
COVID, the gift card, lunch gift card.
Yeah. So it's gift cards provided for lunch.
Yeah.
I thought it seemed. So the reality is there are some exceptions out there for occasional meal money, de minimis meal money. But typically, when you're talking about a gift card, it's going to be taxable compensation. So to the extent you're providing gift cards to individuals for things like lunch and just for award type achievement awards, those are usually being treated as taxable compensation, fully subject to U.S. employment taxes. There was a ruling a little while ago that specifically said gift cards out, cash compensation.
Yeah.
There was another.
I like this one.
So there's a question around. It says a lot of countries outside of the U.S. don't have specific amount definitions in their exemption rules, such as Mexico. How do you get around that? So first of all, we're not trying to get around anything. We want to be compliant. If there are exemptions in place or conditions, if we can design a program to make it more tax efficient to meet those conditions, great. If not, we want to make sure we design and set up the program so that we're in compliance with the rules. Actually, Mexico, for example, does have a social provision exemption for certain benefits. So there might be something there if the conditions are met, but in some cases, it's going to be taxable regardless. But it's just at that point, figuring out how do we set it up so we're compliant.
I'm going to put you on the spot, Annie, when we talk about some of these questions and we keep going. But my question is, are there any programs that you're familiar with that are, more international? The U.S. is a little bit more black and white. Are there any not get around situations, but programs that are tax favorable that people may not be thinking about?
I mean,
I know I'm putting you on the spot. This wasn't prepped.
They're like service anniversaries. I think a lot of countries do have, certain exemptions in place if you meet, a variety of conditions. But in Europe, we do see a lot of exemptions around holiday awards or holiday gifts, Christmas gifts, birthday gifts, wedding gifts, things like that we don't necessarily see here in the US. Yeah. We see a lot of that more in Europe, but there are definitely opportunities to be more tax efficient when you're operating a recognition program.
Cool.
And we see that as a trend too, right? Tying these programs to other moments that matter, right?
Yeah.
So holidays, birthdays, and as opposed to just peer or manager kind of recognition.
And some countries do also have just like a general exemption for benefits up to a certain amount. You can provide up to £1,000 worth of benefits. This is just an example, 1,000 whatever currency worth of benefits in a year to a given employee tax free. So maybe you want to put your recognition program under that kind of exemption. Okay. Again, cool. It's very specific on the country, but there's definitely opportunities there.
And a lot of this is housed in our content solution, right? And I think that's the point, is that, we don't have to go hunting for these or go through kind of as big of a lift to try to pull out of this together. We've done that and put it in our content solution.
Yeah.
I like it.
So we're coming up on time here, just with a minute or so left here. I don't know, Judd, if you had any kind of final thoughts you want to share with the group.
Yeah, I mean, I love the message. I love that this is a topic because it needs to happen, right? Like, the worst thing we do is put our head in the sand and pretend that this isn't going to happen. And all of a sudden, one day, the service, as Scott, as you're calling them, shows up, knocks on your door and says, all right, let's take a look. Our goal is, Sandy, I stole this from you, but don't let the tail wag the dog. Keep in mind, the ultimate objective with these programs is to build engagement, go meet the employee where they're at, build that relationship and loyalty, and drive those behaviors that are going to make the organization and the employee better. Our hope is not to scare people away and not to say, oh, look at all these penalties that could come from this, but to simply look at it and say, how do we do it right so that you can be comfortable, invest more, view this as an investment into your employees, as opposed to saying, oh, now I'm scared of this. But when we do it right, just like, standard investments that we all make, when we do it right, we know that we're on the path that's going to lead to something hopefully positive. And I think that's the biggest piece. Is I love the conversation, but more as a starting point to be cognizant about what we need to be thinking about, not to deter us from going down this path.
Yeah, I think that's a great way to put it. The only thing I'll add is it's not about not only not scaring people, but giving them comfort.
Yeah.
Yes.
Right. And saying, look, you want to look at this, you need to look at this. Don't not roll out these programs. Don't not lean into a good employee experience, because there is an achievable solution in place for you. So the goal is to give you comfort. So cool. With that, we've got a few seconds here. I just wanted to thank everybody for participating today, to the Awardco team for hosting us on these incredibly comfortable couches. I'm going to go get my elbow looked at here after this damage. But this was really great. Appreciate you all having us. And thank you to everybody who joined today.
Thanks, everybody.
Thanks, everyone.